Joining us now is Bank of America senior semiconductor analyst Vivek Arya. $700 price target on the stock, reiterating a buy rating. Vivek, I guess one of the debates on Nvidia is if there's going to be a point in the near future where they reach sort of peak growth when it comes to this big AI leap that they're taking.
Yeah, good morning, Sarah. The point we made in our note is that the free cash flow generation, which, to be sure is 24 plus 25 combined based on our projections, is just the cherry on top of what is a very delicious cake. So what are the layers of that cake? Number one, we think generative AI is still in very early stages. These cycles don't just start and end in 1 year. These can be decade-long cycles. And there is at least 3 to 4 years of upfront hardware deployment, and we are just in year 2. So number one, generative AI is still in very early stages. Number two, NVIDIA's competitive position is exceptionally strong, all the way from chips to systems to software. Number three, towards the end of the year, there is a new pipeline that they have with the B100 and Grace Hopper and other products, which will have much higher ASPs. So I think that promises more growth in 25. And then top of all that, they're able to generate very strong free cash flows. And that's really the key point made in our research, that if I look at the free cash flow generation between this and next year, it could be close to 100 billion. That leaves 60 to 70 billion dollars of ammunition for NVIDIA to go and look at inorganic opportunities, right? Because NVIDIA is a very strong company from a hardware growth perspective, but generally hardware companies are not awarded the same multiples as software companies with recurring revenue engagements with their customers. And that, I think, is the opportunity that is not being recognized, that the cash flow that NVIDIA can generate can help them look outside at engaging and partnering or even doing M&A of software companies that are adjacent to their AI business and really take them to the next level and help them get the price to earnings multiple that the stock deserves for this kind of very strong growth rates.
Although it's interesting, you guys have also done some work on the software side where you are raising the possibility that AI-driven revenue might fall below expectations over the next 5 years. And I'm wondering if those concerns migrate into things like hardware.
Carl, I think it is possible that, look, we are in early stages of what is a brand new technology. Not every thing has been sorted out. There is a lot of process of discovery that is ahead. But you have to realize that technology is its own growth driver, right? In that the cheaper and more accessible you can make technology, the broader the adoption of that technology. And that's an important role that NVIDIA can play because they are very well aligned with the cloud providers, but they're also well aligned with the enterprise customers. And enterprise AI adoption is really the next leg of growth. But what enterprises require is a way to make this technology more accessible, right, easier to use. And that's where we think NVIDIA's broad range of partnerships, right, their ability to deploy this technology on premise and their ability to then go and partner and potentially conduct M&A can help provide a greater level of engagement with the enterprise. So that's why I think it's in some ways a little too early to forecast where this technology could be 4 or 5 years from now, because we are in early stages. And I think NVIDIA has the opportunity to drive much broader adoption than what I think consensus is projecting right now.
All right, Vivek, thank you for coming on and stating the case. Appreciate it.
Thank you.